So, Amer, The Economist nailed it right in line, but 7.9% is still really, really hot, even if not hotter than expectations. What's the March number going to look like?
Yeah, so let me sort of try to put that in perspective. We had an 8/10 headline today. If everything in the CPI next month was zero, except for gasoline, you would still be up around 6 or 7 tenths just based off of what gasoline is going to do. So you're probably looking at a headline number next month that's going to be around 1%, if not in excess of 1%. And that's just month over month. And that means the year over year rate is probably going to move further up, possibly around 8.3%. But I should caution, today we still got about almost 3 weeks left in the month. So we have to see where gasoline heads. But right now, it looks like we're on track for almost about a 20% increase just in gasoline prices alone in the month.
Amer, the narrative was that the base effects were going to kick in fairly soon, and as a result of which inflation would mechanically start to fall. That looks like it is getting pushed further and further out, and that implies to me that the underlying inflation that we're seeing at the moment is even stronger than actually even the headline number suggests. Is that the correct interpretation?
So I would actually say when it comes to the base effects, they are starting in April. So really, it's going to be with the April, May, and June prints where we really get those base effects starting to flow in. Last year, we printed about 0.8 in that second quarter. So it's going to be very hard to match that. I mean, granted, we have printed about, today was a 0.5. We've been around a 0.5, 0.6 the last 4 or 5 months. But it's going to be tough to meet those 0.8 numbers in the spring. Of course, we kind of have to see what the fallout is from the invasion of Ukraine. But if we don't match those, then mechanically the base effects will really start to kick in Q2. And then you have the story of, what kind of relief, if any, do we get in the second half of the year? And that's really kind of, where we're more focused on is the second half.
Amer, when looking at the different components, you already mentioned gasoline prices obviously could have a big influence in March. But when I look at others just from February, food up 1%, food at home up 1.4%. Obviously, there's the wheat situation when it comes to the bread basket, that is Ukraine and Russia. What specific components are you going to be looking out for, putting gasoline aside?
Unfortunately, it's going back to the good story. Yes, we got some relief on autos today. I think we will get even more relief next month in the auto situation. But essentially, anything that you are transporting via trucking is going to potentially see price increases over the next few months. And that's because as much as we're talking about gasoline, diesel is the other big part of this story because diesel prices are also at a record. 75% of the fleet in the U.S. that's commercial vehicles uses diesel. And so anything that is shipped via trucking, whether it's TVs, furniture, any of those sorts of goods items, you could potentially see fuel surcharges come in to play for delivery. And that means that, if someone's paying more to have it delivered, at the end of the day, that could get passed on to the consumer. So I think we have to go back to the good side of it. And even though it seems like we were potentially going to get some relief, the next few months are going to be very tricky in terms of how that diesel pass-through hits into transportation and what that means for what you're paying at stores for items like TVs and so on.
Amer, let's wrap this conversation up and talk a little bit about second round effects. What are you seeing in terms of the second round effects off these high inflation numbers? I'm standing outside the ECB right now. The Eurozone is not yet experiencing the same sort of wage numbers that we're seeing in the United States. Clearly, wage inflation is a factor right now. Just in terms of how this inflation is changing the US economy, what are you observing?
Yeah, so for right now, wages have been moving higher. That's been, honestly, has sort of really kind of predated the inflation surge that we've gotten over the last several months. We know wages were going up before. Prices have also been moving higher. But, what I'm really kind of thinking about going forward is what kind of an impact does this have on consumption? Obviously, wages have been moving up. And so people are essentially thinking, look, we should be able to absorb this because incomes are rising. And to some extent, that's true. But real wages have been struggling in part because of this move in energy for the most part. So the question is, does this sort of really hit consumer spending going forward? We already have a Q1 GDP growth figure that looks like it's going to be roughly flat. And even though that's mostly inventories, we've got to sort of focus on domestic demand and say, does this really flow through? I put out a note yesterday pointing out that even though these aren't record prices in terms of, inflation adjusted data for gasoline, this is sort of the biggest 2-month shock we've had really since Hurricane Katrina in data going back 60 years. So this is definitely going to hit people's wallets. And I really am paying a bit more attention to how does this impact spending moving forward.